Hello and welcome to the Can I Retire Now podcast with your hosts, Nick Russell and Becky Wagoner. I'm your podcast producer, RJ Malik. Nick and Becky, it's so good to see the both of you. And I see this podcast, you are going to talk about elections and market influence.
Yes. Hello and good morning. Yes, today we're going to be talking about a big event that's coming up that you may have heard about, the national presidential election, and how it affects the stock market and maybe potentially, therefore, your retirement savings. So, a lot of people have frequent questions for Nick in this part of the election cycle leading up to it on, oh my gosh, do we need to make changes? Do we need to do anything for the future? And so we're going to go straight to Nick and get the information. So we're going to be covering a little bit of historical performance and policies that are coming, may be coming, and whether or not the current stock market can predict the winner of the election.
Ah, that's interesting.
Yeah. So. We're going to try to do this in the most unbiased, bipartisan,
very neutral.
Neutral way. So we're not talking about any particular candidates. We're not saying who's better or worse, whatever. We're just going to spit some facts today. So let's go on a nice unbiased ride here together.
You're doing nothing but facts.
Yeah, nothing but facts today. Elections can be very politics can be very polarizing for people, and more than ever, you hear things like, oh, if the other person wins, like World War III, or the market's going to crash.
It's over.
It's over, right? And so why don't we start there? Let's start with when a particular party is in office, specifically the president, how the market returns, because I think the traditional and conventional wisdom says, well, Republicans historically have been fiscally conservative. The stock market's going to do better when they're in office, and Democrats traditionally maybe spend more on social programs, so that that kind of slows things down and businesses kind of muck along.
So is that true?
So I'm gonna give you facts here, Becky.
Okay.
Just facts, just math. You know how I roll. Okay, nothing but the facts. So we went back and looked. So if you started with $100,000 in 1950, but now we're talking about 74 years, so almost 75 years worth of data. All right.
Yeah.
So this goes through a few presidencies and a few things that our economy has seen.
In both political parties, but all kinds of Congress setups, everything like that. Okay.
Correct. So if we had $100,000 in 1950 and we invested that only when a Republican president was in office. So you sat in cash when there was a Democratic president, and you only invested when there was a Republican in office. That $100,000 would have grown to over $1 million.
Hey.
Not bad.
Okay.
Not bad. So now if we did the same thing, but only invested when there was a Democratic president and didn't invest when there was a Republican in office, any guesses on how much money you'd have, more or less?
I don't know. We're going to be real neutral. So I'm going to say the same. Any guesses for you, RJ?
I'm going to go out on a limb and say it less.
Please. And that's the conventional wisdom. In actuality, if you invested when only a Democrat was in office, that $100,000 would grow to $3.1 million.
Wow.
So three times the amount of money. Now.
Okay. So should we invest? That seems like the better strategy then. Is there an even better one?
I have a best strategy. So if you get a good and a better, I'm going to give you the best strategy.
All right.
So here we go. If you get out of your own way when it comes to politics and just stay invested, regardless of who's in office, regardless of financial crises and pandemics and recessions, and just stay invested.
Okay.
That $100,000 that grew to $1 million when Republicans were in office, that grew to $3 million when Democrats in office, would have grown to $32 million if you just stayed invested the entire time.
Wow.
So when I tell people, when people come to me and go, oh my God, if so-and-so gets elected, I'm out.
Right.
I'm like, you are incredibly foolish to think that, long-term speaking. And so it really has less to do with who gets elected than what policy they want to put in place. And we'll talk about
Okay.
policy here in a second. It also takes time for that policy to take effect. So what's interesting about these numbers, I didn't really talk to you about that. Becky gave me these numbers, and I then like deep dove into it last night when I couldn't sleep. And I'm like crunching through the numbers. And it's interesting to see what policy has gone into place over time, and the fallout or the benefit from it comes 2+ years later. So a lot of times you'll have someone in office that's like, look at me, I'm doing a great job. But it's really the last person that put that policy in place. And a lot of times it's a different political party that did that. So you just got to get out of your own way.
People are worried about immediate fallout from election results.
Yeah.
And what you're saying is, it's going to go the way it goes either way. It's more about company performance. And then it also will take a while. It takes a while to do anything in Washington,
Correct.
D.C.
Hey,
okay.
You've seen our government, quote unquote, function over the last, at least 40 years of our life. Everything moves so slowly. And even if a new sweeping regulation, financially speaking, went into place, like whoever gets elected here at the end of the year, if they put something into place in the first 100 days, it's not happening in 2025. It may happen by 2026. It's most likely not taking effect till 2027. So we have plenty of time to prepare for that and shift things dependent on that. I will tell you, though, when someone comes out like a few years ago, when Biden got elected, we knew he was going to spend a lot of money on infrastructure. That was his whole thing. Well, then great. Then we can invest a little more in infrastructure. We know the money's going there, right? Like that.
Okay.
It still took almost a full year for the market to see those returns. But it does give you a little bit of insight there.
We talked about how the party of the president doesn't affect necessarily the market performance, drastically. Tell us about what happens when Congress is controlled by the same party or different parties, or it is split? Like a lot of people, we put so much emphasis on who we're electing for president. And there's a whole down ballot that actually can play a role in how things happen also.
Yeah. And I think, again, the conventional wisdom is Republican president, Republican Congress, Republican, just boom, boom, boom. That's got to be the best for the markets.
Yeah, everything just passes, right? Because they're all on the same side. Right?
Yeah.
So we're just making things move.
Again, traditionally fiscally conservative kind of policy. I mean, yeah, that would work. Now, I don't know how accurate that's been over the last 20 years. I feel like we have more national debt and there's more spending and all of that. So no matter who's in office. So let me give you some facts here. If there's a Democratic president and a Republican House, so opposing party, or you have a Republican president and a Democratic Congress, you get identically the same historical returns. And they are, by the way, above average historical returns.
What?
So it is better to have a split kind of scenario here. It is favored a little bit by a Republican president with like a divided Congress, and then a little worse is a Democratic president with a divided Congress. But actually the worst historical returns we get in the market, and this is just S&P 500 data, is when there is a single party president and single party Congress. Both the lowest returning scenarios of those are when it's all Democrat and all Republican. By far. I mean, it's not even close. Yeah.
That is
and in
interesting.
Fact, all Democrat is, in fact, you average about 9% a year. Now, 9% is still really good. Historical averages for the S&P is 11 and change. But there's a difference between 9, 11, and say 13, 14% that those same party scenarios.
So what's the thoughts behind that? When they're opposing, we get the best result. Is that because there's gridlock? Like we just have less change and so there's more stability as opposed to just rapidly changing policies? Am I guessing?
Yeah.
That's what happens?
I think conventional wisdom would say that everything that there's, believe it or not, compromise, right? When you have
we don't hear that word very much now in politics. Okay.
Yeah. if you have to pass something outside of an executive order, if you're passing something through the traditional ways and you have to get through the House, through the Senate, and then have the president vote on it, it's going to have something that both sides like, right?
All right, and then
Conventionally speaking. Yeah.
Okay.
And then that then allows it to be a little less extreme, one way or the other. And I think my experience has shown me that the market cares less about who gets elected than that somebody is elected. And I use that phrase with clients. Yeah, because right now, this is normally we get a little extra volatility in the market. We're about a month and a half, 6 weeks away from the election. By the time this episode comes out, we'll be a little closer. This is when all the unknown, we're kind of going back and forth. And hey, Becky, I don't know if you've been watching the news. Actually, I know you've been watching
every day. I watch the news every day.
Who knew 2 months ago that we'd be sitting here today and saying, well, one candidate has been had 2 assassination attempts, and the sitting president wasn't going to run for re-election. I mean,
yes, this is not the election anybody thought would happen.
No. And I'm sure TMZ loves it, and every stand-up comedian loves it. It's like a lot of entertainment. But
we're very good at unprecedented times now. I
correct.
think we've got the experience in. Yeah.
And the market just wants to know what to expect. So if, do you want to talk about like some of the policies that
there's some policies that both candidates are, proposing or on their, initiatives or whatever that would have drastic effects that I don't know if it's a scare tactic or whatever, but both candidates have some stuff. So what are you hearing from your clients about most often? What is concerning them?
Okay. So if we're just talking about policy, not the person, right? Which is what the market cares about.
Yes.
There's definitely one thing on each side that I've heard more about from clients than anything else. So let's go Republican side first. Tariffs. Trump has talked about, tariffing China once he's elected and all of that. History shows that tariffs could be a very good thing for us as an economy. Long term.
Really?
Yeah, the idea is you make it harder for a foreign country in a way to sell product here in America, right? Which then creates the disconnect for them where they either need to, they're going to charge, but the problem is that the foreign country, in this case China, is going to just charge more. So this is the example I've used because I think if this is still accurate, we buy more dishwashers in America from China than anywhere else. I believe that statistic. Don't hold me to that.
It's a very specific example, but
I know.
All right, I'm on board.
There are a few things that let me buy more dishwashers.
Okay.
So let's say you and I want to buy a new dishwasher. Right now we buy it from China or a Chinese company. It's shipped here. We buy it at Lowe's, Home Depot, whatever. Great. Now a 30% tariff goes to China. What do you think is going to happen?
We pay 30% more. They're just passing that along.
Yeah, they're going to pass that cost right to us. Now, the assumption is that then an American company like a GE or somebody's going to come around and say, oh, no. Let's ramp up production because let's say you bought a dishwasher.
People are going to look for the lowest price. Yeah.
Bingo. If it was $500 and now China, a Chinese company is selling it for $600, well, now if an American company could come in and sell it for $500 or $550, like all of a sudden to buy American. But that takes so much time for those factories to ramp up, product to come out so the long-term potential benefit is going to feel some short-term pain. Okay. So even though I personally, and this is just a personal belief, think some tariffs could actually be very good for us long-term, the short-term pain is going to be there. And that's never talked about. And so if people also can buckle in and hold their breath for a couple of years, it may
and wash their dishes.
May be a good wash your dishes yourself, and then you can get a nice dishwasher later
at a good price.
And we could do a whole episode on tariffs because there's a whole history of them working, not working, different ways they've been implemented. I actually had a client ask us to do an episode on tariffs, and I'm like, all right, I'd have to do some heavy research on that.
Yeah, same. I don't know anything about tariffs.
So that's like the thing that I think Trump has mentioned that I get asked about much. Now, Harris, I got asked yesterday. I get asked every other day about taxing unrealized gains.
Yeah,
So
I've heard about this. This is an interesting concept.
yeah, and it's been really similar to Trump and his tariffs, very like casual paintbrush of like, well, we'll tax unrealized gains. And I'm like, okay, here are all my
And
questions about how
yeah,
do we narrow that down? So give you a little background. If you own an investment, not in a retirement account, you buy it, you sell it, you're going to owe capital gains on what we call realized gains. So
the
basically,
money
since you
you
sold
make.
it, it's the
Okay.
money you made, the profit. You
Well,
also get a
that makes
tax
sense.
write-off for a loss.
Taxes. In every episode we talk
I
about.
know. Well,
Anyway,
taxes
okay.
are important. Welcome to the Can I
Okay.
Retire Now Taxes podcast. No.
No.
So, but it's kind of fair, right? You get taxed on money you make. I hate to use the term fair, but you also get a tax write-off if you realize a loss. Great. The concept here is then if you buy something and you never sell it, you never realize those gains. Those are what we call
Yeah, like it
unrealized gains.
increases in value, right? We bought it at
Yeah,
$5. Now it's $95, but we haven't sold it, so we don't have
correct.
that money.
Yeah,
And that's the unrealized capital gains that is being proposed to be taxed, even
taxed.
if we haven't made the money on it
Correct.
to pay those
Now,
taxes.
correct. Yeah. And so you know what's likely to happen in that kind of scenario is
No, I
you,
don't. What is
Becky,
it?
oh, you would
Okay.
owe taxes at the end of the year. So what are you going
Yes.
to do? How many people just have that extra money sitting in their back pocket? Not many.
Okay. So I'm going to owe these taxes on money I don't have. So I'm going to have to sell the investment to get the money to pay the taxes. And now I don't have the money again or the investment. Is that what's happening?
Correct. So so you are yeah, you're actually going to be think of like this is like, air resistance when you're flying you're now getting all of this friction. You're going to have to reduce your assets to pay the taxes on your assets that have that you have not realized the gain on, that you haven't taken the profit. First of all,
This is a
insanity.
very interesting
Insanity.
policy
Yeah, no.
proposal that has
No.
not happened and would
Has not happened,
we
of
should
course.
make that very clear.
And,
Okay.
and the what's being defined as who would be affected by this, what assets would be affected by this, has not been clarified. A simple question is, what happens if I have a loss, an unrealized loss in a year? Are you going to give me a tax break on unrealized losses? That's not been
Oh,
talked about. And I'm like, you can't tax me on an unrealized gain and not
this is the
give me a
physics in you,
benefit.
right? An equal opposite
Yeah,
reaction. Is that? Okay.
yeah. So the concept here is to affect not even the 1%, but like the 1% of the 1%. Like Elon Musk is the worst, best example because when he
Worst.
bought Twitter, well,
Okay.
when he bought Twitter, he used Tesla shares as collateral to get a loan to buy that. And that's an
Okay.
untaxable event, right? But if
Which
he sold shares
is
to
insanity.
then
Yeah.
use the cash to buy it, it would have been
Mm-hmm.
realized he would then have to have paid taxes. So that's, I think, where it conceptually started. But I mean, let's think about this in our day to day.
Oh,
What
okay.
about our
Okay.
house? What if our house goes up in value? Is someone coming around and appraising our houses every year? I mean, that's an unrealized gain we have.
Houses do get appraised every year. So, yeah, they could then go after you for that. This is
What a scary thing. And by the way, what in my opinion, if it passes, and there's so many what ifs, right? So like in this example, we don't know most of the information, which is what's so aggravating to me about politics. We'll talk about a policy, but we get like the first 10% of it. Like I want
Yeah.
the details. And if this were to pass in this fictional way we know about it, um, I, I think the idea is to make money from the uber wealthy that aren't paying their quote fair share of taxes, right?
All right. That's the motivation behind
That's
this.
the
Yeah.
motivation behind it. The net effect was it could destroy wealth accumulation for the other 99%. Because the example
Okay.
you gave, Becky, if you're going to have to sell an asset to pay taxes on an asset, and
How
then
am
the
I
next
supposed to
year
accrue
you won't be
anything?
bingo, it isn't going to grow as much. Like you play this 3 steps forward, 2 steps back game. And so it is one policy that I've heard talked about that I would be blown away if it ever came to fruition. So if Harris wins and she tries to pass it, I mean, again, I'm not an economist, but I can't find a single economist, analyst, or anybody that I get information from that thinks this is even remotely a good idea, fiscally speaking. Now, it will bring in so much revenue to the government. So it would pay off our national debt. But at what cost, right? Like at the cost of the wealthy, but also the cost of the rest of us.
Yes.
And so, again, who knows? I don't know if it'll ever pass. The same with the tariffs. Who knows? At this point, this is all just conjecture to see who can get elected.
Yeah, and of course, each candidate has, there's a million different policies, right? We shouldn't a lot of people are single issue voters, but these are like down in the nitty gritty policy.
This is like
choose
really
these as a single issue. Yeah.
Yeah, this is really single issue in my little world of saving, investing. And because of that, I've gotten asked a lot about them. So I think it's interesting to see what could come of that. And I could see a world where either one of the candidates get elected and neither of these two things go into place.
Oh.
So I don't for listeners, sounds really meh.
A little doom and gloomy. Yeah.
Yeah. But don't get too worked up. It's kind of like if my person doesn't get elected, the stock market's going to crash. Historically speaking.
All right. No panicking.
No panic. Don't panic.
All right. Because policies take a long time to pass.
Yeah. And it's kind of like Braveheart, right? What'd you say about Braveheart the other day?
Yeah. Hold, the scene in Braveheart where it's like, hold
the line.
Yeah, just so everyone in their investments should just stay strong and hold.
Just hold. Just don't freak out because of the election. Don't ever freak out, but don't make moves just because of the election. Make moves if policy and economics dictate those moves.
So another thing that I read about on the internet, because everything is out there and available to us, there is a theory out there that the current market performance can predict who the winner of an election will be. Have you heard about this?
I have heard about this. Yeah. So what did you find out? So this is presumably so we're talking about the same thing. The market leading up, leading up to the election.
Yeah, the 3 months prior to an election. Specifically, they were talking about the 3 months. So really recent, recency effect on the election. If it is a stronger market, good performing market, then the incumbent party is likely to win and stay in office because people see that as a vote of confidence, like stronger performance. If the market and the economy is not performing well, it is an indicator that the opposing party will be elected because it is, an opposite of feeling, right? Like a vote of no confidence in the performance of what's happening. So what are your thoughts, Nick? Is it really a fortune teller? Should we put all our eggs in this basket here on these theories?
I immediately thought of a word I shouldn't say on the podcast.
Okay.
I believe it to be, let's just say, false.
Phooey. Hogwash. Okay.
Phooey? Is that what you said?
Phooey. Yeah. Hogwash.
It's akin to something you'd find in a baby's diaper. How about that?
Whoa, strong feelings from the financial advisor.
There we go. But I get why people feel that way. It is very aligned with my party, if they don't win, now it's not my favorite. It's look how good the economy is doing, the market's doing. By the way, what a individualized bias that is, right? Like if you're really struggling right now, but the overall economy is doing well, you'll feel like, oh, this isn't good for me. We need a change, potentially, right? But maybe the economy is doing great. Or and of course, these episodes come out, of course, after we record them and produce them and bring them out. But the Fed met yesterday and cut interest rates again by 50 basis points.
Yeah.
The Fed. I know you're the guy on the statue. Yeah. So the market had an amazing couple of days. right? Like because everybody's rejoicing and the interest rates are coming down and all of that. That has nothing to do with who's president. So
Who
the
will
fact
be
that,
elected president? Yeah.
yeah, who will be, well, and because of the fact it has really nothing to do with who is currently the president. So
Well, I
I think it's
mean, the
hogwash.
president does appoint um the chairman of the
The Fed
Fed,
chairman, yeah.
though. I mean, so there is a little trickle down. However, the Fed is overall affecting acting independently of his
Supposed to be,
particular
yes.
party.
Yeah, it's supposed to be. I
Okay.
will not be quoted saying they do work independently. I will be quoted saying they
It is
should
their
work independent.
job
Is their job to be
description too.
independent? Yeah.
Okay.
Can you use the word allegedly working together?
Feels like I'm insinuating something if I say allegedly.
Okay.
I would say it's supposed to work that way.
Okay.
Yeah. But you do make a good point, Becky. I mean, whoever the standing president is does make certain nominations and
Yeah,
takes
I
rid
mean,
of people in power that do influence those decisions. No
okay.
different than a Supreme Court justice, right? That gets nominated by
Who were
standing
also
president.
completely impartial.
Of course.
She said
Of
with
course,
a smile on her face. Okay.
yeah. For those not seeing the video of Becky eye rolling and smile. Yeah, sorry, go ahead.
All right. So the current market performance is not a reliable predictor of election results. So we should steer clear of that. So,
No.
So overall, with elections affecting your retirement, it feels like you shouldn't drastically impact or change any of your investments based on election results, election hearsay, or whatever. What you're saying, like Braveheart, is just hold and like talk to your financial advisor, and they're the best ones that are gonna steer you on the path, not the political party in office.
So let's say let's do like 3 different versions of people, right? So you have like younger investors, wealth accumulators. They're buying, they're holding. Look, just keep contributing, keep being growth oriented. Go. You get the people that are like pre-retirement and in retirement. Their situations are going to be a little more nuanced. And I mean, if you're working with an advisor, you need to have conversations. Because I would say probably the core of most portfolios, just rebalance. You don't need to change. Depending on how your advisor manages your money, there's usually some layer of, more, I would say, a chunk of money that could be maneuvered, right, between areas that either the advisor's favoring or the market favors, or simply avoiding areas that look unattractive right now. And those are the things, as some policy comes into place, it's like
policy, not party.
Yeah. Correct. The policy that goes in place. Yeah, because I'm telling you, someone's going to get elected, presumably. And then nothing could happen. Like no new policy, no major reform could happen. And that's okay. Or it could come in and just guns ablaze and everything could change. And that's why you just need to be aware enough of what's happening and in good conversation and understanding with your advisor. Because there may be some changes that make sense. Like I said, when Biden was elected, he was going to put tons of money towards infrastructure. We leaned into that as a firm. We made sure we owned infrastructure names for clients. They did very well. And now years later, the money's already been spent. It's already been invested. The stocks have already gone up. And we've scaled back. And so if we know money is going to go to an area, that's an area you could lean into. But, obviously talk to your advisor. Everybody's situation is different.
Okay. So the stock market and elections.
I feel like we did this without potentially offending anybody. I was going to do my Trump impersonation, but I don't have a Harris one to like
balance it,
equal it out. Yeah. So I thought that would be unfair. But yeah, I think it's one of those things, like we talk about being logical with money and not emotional. And politics has become such an emotional hot button for people, and it is going to mess you up if you let it work you up too much. You have to really,
that makes sense.
Yeah, you have to strip away get out of your own head, strip away your bias. Just think about, okay, this person's in office. This is the House and the Congress. This is what's likely to pass or not pass. And in a lot of times, it doesn't matter. And one of the first things we talked about, the returns, if you stay invested, you're going to not only beat the other guy, you're going to crush people that only invest part of the time. I mean, it's not, we talked about 1 million,
That makes sense.
3 million, 32 million. It's not even close, people.
Not even close.
Yeah.
Speaking of not even close, Nick, I have a fun fact for you regarding elections.
I'm ready. I look forward to these every episode.
We have only had in the history of the United States one president elected unanimously.
Unanimously elected.
Yes.
No questions asked.
Yes.
I think I know the answer to this. RJ, do you have a guess? I'm going to put you on the spot.
I'm not going to guess because I just looked at your notes.
Okay, I didn't look at the fun fact. I try not to because it's that entertaining to me.
In the future, I will not look at the fun facts so you can quiz me, but I just looked at the fun fact, so I'm going to abstain.
Okay.
Right. Nick?
Was it George Washington?
It was George Washington.
Okay.
Everyone was on board with this guy, the first president of the United States. Like, he was elected unanimously. And the trickle down of that was there was another president that was almost elected unanimously, not far after George Washington. Any guesses?
I'm trying really hard to not say one of the most recent presidents just to like get under people's skin. Shortly after, well, we had Adams. Wasn't Adams the second president? Jefferson. I'll go Jefferson.
No, it was James Monroe. Everyone was on board with James Monroe, except they wanted to give this honor of being the only president elected unanimously to George Washington. So one elector was like, I'm not going to vote for him because I want George to be special. So George Washington is gone into the history books as being the only one that was unanimous, but everyone was also behind Monroe as well.
And it will probably never happen again.
Never.
Oh my God.
We'll never get close to that again. Are you kidding?
You want a safe bet? Yeah. Safe bet in Vegas.
There we go.
Yeah. All in on that'll never happen. Yeah.
Yeah.
That's, well, that's interesting.
Yeah.
I kind of feel like I remember that from like high school history, remembering that. But yeah, he was a good dude. I saw him in Hamilton. He did a great job. Yeah, it was very George did all right. So yeah, I guess the moral of this story to kind of summarize is the party that's in power. You're better off investing the entire time instead of trying to play favorites on only investing during your party in office.
Non-partisan. Okay.
Yeah, markets are nonpartisan. Markets care about policy. They care about knowing what to expect. So they're not predictors of outcomes. They're really waiting for the outcome so that they know, investment firms know how to invest their money. Large companies know how to invest their money. There's bigger impacts to the market than who gets elected. Namely, we just talked about interest rates a couple episodes ago. That's a much bigger impact on what's going to happen with the markets than who gets elected president. So even though it is a hot button topic for people, and I would recommend everybody go out and vote, and I don't care who you vote for.
If you're qualified.
Go out, have a good time. Yeah, go outside, go get wait in line, vote for somebody, but just then breathe, and it'll be okay. And in 4 years, you get to do it again.
So that's the homework you're recommending is
go vote.
Go vote. Research for vote for it all the way down the ticket because it matters who's in the house and everything as well.
Do some research.
Yeah. Do your research, vote, and then talk with your financial advisor and do your best Braveheart impression and hold.
Yeah.
Okay.
Yeah. I think that works. You had a recommendation a couple episodes ago for people to watch TV. So I think I can recommend as homework people go vote. I think that's reasonable.
Sounds good to me. I'm all for it.
All right. Excellent. Nick and Becky, can you remind people where they can find you?
Well, RJ, they can find us easiest to be on the website, sunrisewealthadvisors.com. But we are popping up everywhere. LinkedIn, X, Facebook, Instagram, you name it, you got it. Becky's face is showing up everywhere.
It's hard to avoid us at the moment.
Yeah, no, it's been fun, and we appreciate everybody listening. And if you have any questions, feel free to reach out. We're happy to help.
And do you have anything lined up for the next podcast?
Becky, do we have anything lined up for the next
No,
podcast?
tune in to find out what we'll
Oh,
talk
there we go.
about
Another
next.
cliffhanger. You can tell immediately when we're prepared for the next episode or not. Actually, you know what I'd like to talk about in the next episode?
Oh, it's my
Is
homework, friends.
your
Okay, go ahead.
homework.
Mhm.
We're moving, and I would
Oh,
like to talk about our experience with. We were planning on doing a home renovation
deciding between a renovation and a move.
and
Okay.
a move, and then kind of the factors that have kind of fallen into place of what we do with our existing house. Is a move reasonable? Some of the financial, but some of the personal reasons that kind of pushed us one way or the other. I think that'd be a fun thing to share.
And can I share the nightmare that my wife and I had for our last move? Can I share it with you
Absolutely.
guys?
Yeah.
Yeah.
Yeah, it'll
Yeah,
be
for
fun.
sure.
We'll all share the chaos of movie. And I, for people that know me, stuff rolls off my back. I'm fine. Like things don't bother me. I loathe moving. The idea of packing, moving, unpacking. This is maybe my only pet peeve in life. And so, yeah, I'm
And I
so
get to live
excited.
with them during it.
Yeah, I'm
Yay.
excited to share this experience with this lovely lady. So, yeah, maybe we'll talk about that next time. I think that would be fun to share.
Interesting. Yes. All right. Well, we're looking forward to that podcast. And thank you for listening to today's Can I Retire Now podcast. Until next time, for Nick and Becky, I'm RJ Malik.